Good afternoon. Time to wrap it up for December the 10th, 2015. What a day. I mean, we did roll from the December to the March contract today. We normally, when we finish out a day like this, if we have normal volume, we'd be about 500,000. So a lot of hedge funds start to shut down at the end of November, come out of the markets, and we're probably seeing the effect of some of that too. I just wanted to talk to you a little bit about how you can integrate the information and look at the different screens. And you can see right here that we've got a retest failure set up with a failed auction. They tried to take it harder, they couldn't. And this bar is thinner. There's less volume in that bar than there was in that bar right there. Okay, on the 1 minute chart, right in here, we've got a higher high, we've got divergence on our bottom study, and then right here on this green bar, this study goes negative, goes to a minus reading right in here, and the market starts to sell off. It's not a triple cross, it's pretty close, but what you have is that this bar goes red. Sell stop in the market when you break that little ledge. Sell stop in the market when you break this ledge right here. All of it's coming together. You can see right in here that we've got 50 lot trader volume is even. You can tell right in this area that the buying interest in the market was less than it was here and there. So a lot of stuff comes together, but you've got this divergence pattern right here. You've got a higher high, and then you've got this crossover right here, and obviously we have our crossover here on that bar. So our favorite moving average turns down on this bar right here. The MACD goes negative on this little green bar right there. So a sell stop when you take out that bar's low is appropriate, and it also fits our setup over here. As far as what went on today, roll days are tough to play. They don't they don't give us the normal action. We had a 35-37 buy, which is this area right here. It set up 2 trades. Out of that, that was our buy zone. Starting off, we had a 44-46 sell. That gave us 1 sell out of this area. Then we jumped it up to 49-50, and the market blew through it. It got quite a bit higher. But you can see right on this bar just the dynamics. There's a lot of volume in this bar, but we don't get volume, so we don't have follow-through buying. Market corrects, leg 1, comes back up. There's no volume on this bar right here. It's a very skinny bar with deceleration. And you can see the bars start to get fatter when we come down, and there's your second leg. Retest failure, couple of Bs. The market starts up. This B was a false signal. Those Bs all worked. So very, very tough trading again, just given the games and the shenanigans and the volumes that we get to see at the edges. So very, very tough trading. It's not easy. Probably the biggest thing we had going for us was yesterday's heavy selling. Today the market is bought up, and that's where we find ourselves today. So we had heavy selling yesterday. Thought the first trade was a sell. Today I did produce a small winner. The best trades of the day came from the long side down to 35-37. Inside day here on F1, that says trading range. Looking at our F2 screen, putting it all together. Leaning P, volumes in the top half of the distribution. A nice test off the lows here. So if the market were to close right here, right now, at 48, we'd be trying to sell the 54, 57 area. Would be sell 1. Get through that. At this F period high at 67, we'd be trying to sell 64, 67 for sell 2. On the buy side, 40, 42. 35-37. Now we have news tomorrow that can shake the markets up. PPI unchanged at 0. Core plus 1/10. Retail sales, all categories up 0.3. Ex-auto plus 0.3. Ex-auto and gasoline plus 0.3. Business inventories plus 0.1. No one will trade that. Consumer sentiment can come in lower at 92. So the focus will be retail sales, ex-auto. They'll look at PPI, but it all comes at the same time, so the PPI numbers will be lost in the reports, and then consumer sentiment. So 1, 2 is how the markets, I think, should play. Underlining, I think. Trade what we see, not what we think, right? Now, if our idea is against what we see, we take the trades, but we just don't stay with them as long. If everything's lined up, if what we see is what we believe or what we thought might happen, then that's a much stronger trade for us. Okay, the hedge was in the 10-year today. Tomorrow's a pause day. That usually brings a quiet day of trading. So got an inside day here that has trading range written all over it. You get F2. Doing an I split. Trying to notch it lower, but again, I think we'll be a little bit lower in London, but I think we'll probably come back. So buying the 5 to 9 area to let them get stops below today's day session low, and I'm assuming the stock market is not going to fall out of bed. If it does, we won't be able to buy it at that level. Buy 229 to 01. On the sell side, we're going to sell failure to take out 16 to 20. And 23 to 27. I just see a trading range, and a lot of it will be dependent upon what the E-mini does. We do have news tomorrow that can shake things up. Retail sales can move the market. And we have a B, but volume is above time, so a trading range market is what this market is telling us. Last rotate up stopped at 15, currently at 8. So sell failure to take out 12 to 16. Fairly aggressive. And then 23, 27. Sell 2 on the buy side, 55.01, 29 to 01, buy 1. Buy 2, 17 to 21. Playing for a trading range day, pause day after we've had an auction. Gold still pointed lower, but boy, no one's fallen over themselves to get short, are they? So inside day, everything's pointed lower. We'll see on F2. So I think the first trade in London is find a place to get short to see if we can take out the 1068, 1070 area. Can't, we can trade from the long side. Definitely a B, definitely pointed lower. So first sells 73.75 and our 79.81. We're at support, so you can make it 65, 67. I think they're going to go a little bit lower, but we'll put a question mark at 70. And then our 60 to 62 for buy 2. Crude oil, I think we're headed below 35. And perhaps lower. I think on that last break the low was $33 and everybody knows it. So I don't see how we don't get below 35 anyway. So lower high, lower low, find a place to sell it, and don't go, well, duh, Charlie. Well, that was a tough one to figure out, wasn't it? Got a B pattern right here. So 37, 37 and a quarter, sell 1. 50 to 75, sell 2. On the buy side, we're going to go for stops below 36. So 36, 36, 25, buy 1. And I'm going to put a question mark at 50. We haven't been there yet. And it's a number that could hold. And then buy 2 will be 35, 25 to 35.50. This 50-cent level doing a pretty good job of holding the market up as we come into it. And last but not least, the euro. Find a place to sell it unless China has devalued again or the yuan has been hit pretty hard. Inside day, seller above 110 and a buyer on this breakout from 109 even. That's it, M period high, and N extends up. And on the F2 screen, definitely a B, but volume's above time. So, selling 975s, 110. On the buy side, I think we got a chance to go down at 109, 109.10, buy 1. And then 875, buy 2. That's it for December the 10th, 2015. I'll see y'all bright and early in the morning. Y'all have a great evening. Be getting pretty close to 70 this afternoon. Pretty nice.